Welcome to Markets Now. I'm Michelle Rook with Martinson Ag. Grains mostly lower here this morning with the livestock futures seemingly mixed. We're up in the cattle and we've seen a little bit of mixed action in the hogs so far this morning. All right, let's start off over in the grains, Randy. First of all, wheat market seems to be leading the charge lower. Some of that is due to the fact we didn't get any more export business confirmed here from China or otherwise this morning. But there's more going on in the export market, so talk about it.
There is. I mean, Saudi Arabia was in over the weekend and bought a large chunk of wheat, over 1 million metric ton. It looks like it's going to go to Russia, and that, of course, is a little bit, I think, putting some pressure in on the U.S. market. Russia did see a little bit of a hike in their price over the weekend as well. So it's interesting that they got the tender and nobody else did. But you're also seeing some better than expected weather down in the southern plains. Rains came in last week. That's certainly helping to improve the winter wheat conditions, even though winter conditions aren't very indicative of what happens in the spring. But it is helping the crop improve and go into dormancy in a lot better shape than what it first was. And then we're also hearing about better than expected yields in Argentina's wheat crop. Now, they are getting rains, which is going to hurt some of this later harvested, the quality for some of the late harvest wheat. But for right now, it's more bushels, and that's putting some pressure in.
And as I mentioned, no China export business. Are they done buying?
I don't think so. I think they're taking a break right now. I think they're looking at evaluating. They'll get these bushels in and they'll take a look at it. I still think that they're going to come to town after the first of the year and buy some more of our wheat. But right now, our wheat market is going into the doldrums. I mean, right now, domestic demand is is low. We'll see that start to pick up after the first of the year. And I think then we can start to see a little better picture for wheat.
Yeah. Sometimes when we have funds really short, we get some end of the year short covering, but funds in the three exchanges have already covered about 70,000 contracts of their very short position, record short position. Will they cover more?
I don't think so. I mean, I think, we saw that, as far as what we saw for the Thanksgiving weekend or Thanksgiving, I thought, we saw a pretty good amount of that. I don't know if we will for the going into the end of the year. To me, it looks like everybody's kind of happy with where they're sitting right now. This is the last full week of trading for the year, and it's been pretty quiet. Our volume is pretty low, so I think they probably are sitting where they want to be.
Yeah, we are going into holiday mode, that's for sure. And corn market drifting, but some of that is just because it's following wheat.
I think so. I mean, it's stuck in a tug of war between the soybeans and the wheat market. Soybeans are trying to go higher off of South America weather, and I don't think beans or the corn market wants to go down too much. Now we've seen the lowest volume in 52 weeks, so that tells you a little bit more about the holiday mode that we're trading in corn. But I think there is enough concerns about what's going on in Brazil with the safrinha crop that this market isn't going to sell off too hard until they get a little more clarification on just where the planting is going to be and where the potential crop for the safrinha crop is going to come in at.
You bet. And right now, Brazil's prices are above ours on the corn market. So we certainly have gotten more competitive, haven't we?
We have. I mean, we're still the cheapest corn in the world when you look at the prices. So if there is some corn demand that's out there, I would expect that it would come to the U.S. And we have the ability to get it shipped in a pretty quick manner. So I think that'll also help because we're seeing some slowdown as far as, corn coming out of Brazil. And of course, Argentina doesn't have the supplies available yet. So if there's somebody that needs corn in a just-in-time inventory type situation, then you got to come to the U.S.
Yeah. So you mentioned soybeans have been trying to hold weather premium from Brazil. So we were up 12 cents last week for the week in the nearby contract, but now we have rain in the forecast. We have had trouble seeing that forecast confirmed. How long do we continue to buy into that forecast?
That's a good question. I mean, it's the ever-present rain. I mean, it never shows up. It's just like saying we'll see you tomorrow, but tomorrow never comes. And that's kind of what this weather forecast seems to be like. And, right now it's looking like the next 5 days are going to be dry, for the northern regions. They're hot. I mean, their temperature's well over 100. So it's starting to really cause some damage to the crop. So having that, idea of rain out there is keeping this a little lid on this market, but I don't know why, because we certainly have been seeing quite a bit of damage done to the crop. At this point, the 6 to 10 is calling for rain. The market is buying into that. And I guess when that 6 to 10 comes, if the rain doesn't show up, at some point, the market's got to realize just how bad the damage is.
Yeah, the funds are still long in that market, though, like 30,000 contracts. And so are they possibly just, cashing out some of their positions here into the year and just waiting until we get a forecast after the first of the year to kind of reset?
And it could be, I think that's a good point. I think there is a little bit of that. You also have the January contract that's going to be going into delivery here at the end of the month. So we're going to we'll be seeing some rolling out of the January into the March. And a lot of traders are looking at, do I roll or do I just liquidate? So I think that's going to be the big question going forward. Maybe some will want to even up their positions as they go into the end of the year, end of the fourth quarter, and then start 2024 new.
Yeah. We also didn't see any export business this morning, and we had every day last week where we did have flash sales. So that could be a little bit of today's pressure too, maybe.
Oh, most definitely. I mean, you always get used to seeing the sales and you expect that they're going to keep coming. We will see a pretty good export sales estimate for last week in the report this week. But then we're going to go to 2 weeks where it's going to be fairly quiet, especially because we're going to be looking at the Christmas holiday and the New Year holiday coming up here shortly.
Absolutely. So cattle are up. We had a higher weekly close last week in both live and feeder cattle futures. Have we turned the corner now?
I'd like to think so. I mean, we had a good strength. Feeder cattle actually did see a small gain the previous week in the January contract. They were up 87 cents. So I'm going to take that as a victory as well and say we've got 2 weeks up in the feeder cattle market. Hopefully we have turned the corner. We now are seeing, the beginning of 24 is what most of the packers are looking for to get the product ready for. That's hoping that we're going to see an increase. Of course, that's what USDA is expecting. We're going to see an increase in domestic demand. And I think that's helping to push this market. Cash really never did drop that much, and it's now starting to lead the futures back again.
Yeah, it was down 6 weeks in a row. It'd be nice to see a higher weekly cash movement because that would certainly help us. We're still kind of caught between packers raising slaughter rates versus higher weights. And so have we lost our leverage? Is that part of the problem here too?
That's part of it. I mean, the weights are up because of the slowdown they had. Now we're going to start seeing that gear back up. Hopefully we can get the weights in line. And we've also had very good feeding weather. I mean, that's the other part is that, the feed efficiency has been extremely well because of the warmer, better weather that we've been seeing compared to last year. So that's helping to put some weight on those cattle.
Absolutely. We do have a cattle on feed report out on Friday. In fact, we've got a lot of USDA report data coming out.
We do get the cattle on feed report, which likely will show another increase in placements. But we also have, I believe, the hogs and pigs report coming out, which is going to be interesting. The last one kind of hinted a little bit on herd expansion on some of the numbers. We'll see if that follows through.
Yeah, hogs, we have February now at a premium to the index. The index keeps falling, and so it's going to be pretty hard to get that market to get off of a dead center and move higher, isn't it?
It is, and I think we're starting to see some more, spreading taking place there, where guys are buying cattle and selling the hogs, and going into the end of the year, I wouldn't expect that kind of trading to increase.
I agree with you. That was a big trade here for a long time. All right, thanks for joining us, Randy Martinson with Martinson Ag. That is Markets Now.